BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. Right, this laptop is on its last legs, but we're just going to run through this very briefly because production value is not the strong point of my channel anyway, and when I go away I use this laptop so it gets even worse, so I'll try and make it quick. Right, so Bitcoin's continuing with its rally from the bottom of this the trend line, the descending channel that we're in, which again, just to highlight, it's a bullish formation. It's a consolidation at its heart, so you'll be looking for this to break out rather than break down. But just like a normal consolidation, it continues to go down until it breaks out. And my preference is going to be when this 200 exponential on the daily moves into the channel, giving us a very strong support. So if for whatever reason, if we do continue with this, which is not in the bag at all, it's looking quite good at the moment for continuation. I'll show you why on the 4 hourly in a minute. But if we just focus on what we're doing, we're cycling down this this track, and I think that we have a little further to go. And I'd love to see Bitcoin retest the bottom of the channel again later on at the end of this month, where the 200 simple moving averages crosses into the channel itself, creating a really strong support around this lower sort of mid to low $24,000 zone. And that's where I'll probably buy some more. I'd probably buy some more Bitcoin and probably buy altcoins at that level, expecting a relatively decent risk to reward bounce and continuation, and generally maybe even a bottoming signal for the market again. Now, if we think about the S&P, so gold is a real mess here. I appreciate that this is a very messy chart, so just wanted to focus on this area here, which is your 200 simple, and where we would bounce from again if we move down to that level. But the main thing, because you've heard me talk about the rotation from stocks into commodities. If anyone was watching this channel in the bear market, which not many people were doing, but if you were doing that, you would have recognized that I managed to get two major big swings in all markets. I called them the Everything Bounce Part 1 and the Everything Bounce Part 2. Now, the Everything Bounce Part 1 was based around a rotation from commodities into stocks. So we had oil and gas and gold and silver and basically every commodity possible rallying like massive rallies, while the S&P and the stocks were continuing to go down, and Bitcoin and crypto as well, all continuing to go down. Now, there was a peak in that commodity market, and then I saw a subtle shift begin to take place into stocks, and we positioned ourselves in a very significantly low area for stocks and had an amazing rally. A bear market rally, but it was a really, really good bear market rally. I believe it was this one actually, from here to here. And again, we knew when to get out because there was a trend line of significance here showing that we're still a series of lower highs and lower lows. And lo and behold, we got out at the right time, allowed it to come down, bought back again. And I said, I think this is the low. Now, the reason I'm just showing you this is that all markets do rotate. It's very common. And with the Dixie coming down and the S&P still rallying up high, let's turn all this noise off so we can just have a look at it simply, really. Then all we're looking for is a rotation from stocks, which continue to run hard as the dollar continues to move down. And on a fundamental basis, that the central banks are going to continue with that push down for the dollar. I don't really see any reason as to why it's going to rally massively anytime soon. You might see some bounces around 101 to maybe 100 flat, but it looks as though the S&P has the power to continue up to 4,500, which is where we'll probably see a rejection and a consolidation. Now, where are you going to go, right? I took profit on stocks yesterday, on quite a few stocks, large amounts as well, realizing some of those gains because it was just, some of these things had rallied 300%. So I took profit on those, even though I see a little further to run. Now, what do you do when you take profit? You take profit into cash and then you think about redeploying it. Where are you going to redeploy it? Well, first of all, the dollar could bounce. It could have a decent bounce around 101, so cash is not a bad place to have it before you redeploy it. And then where are you going to redeploy it after that? So if we bounce from 101 back to 105 and gold is still accumulating at this current level that it's at, you think about other things that you can put it into, and one of them would be in gold. So I think that we're going to get a rotation from stocks to gold, but in the interim there will be a cooling off period for both of those, where the rotation hasn't yet started, where people are sitting in cash, like myself, and looking to redeploy into other areas. Mostly commodities, I think, is going to be the main thing. Now, we've recognised recently, I suppose in the last 4 months or so, that gold and Bitcoin are way more correlated than Bitcoin and stocks. So stocks are having their rally. I think they're going to be profit taking around this level. Then there's going to redeployment and a rotation into gold and Bitcoin, which should lift the market up together. That's my theory. It's similar to theory to the everything bounce part 1, apart from this time round, Bitcoin has switched sides. So it's now being moved like a commodity, whereas previously it was trending more with the S&P. So that correlation with the S&P has shifted, and the correlation to gold is much higher. So I think that's what's going to happen here. I think the stocks are going to finish their rally around this level, 4,500. There's going to be a short period of sort of nothingness before the redeployment. So waiting for a short bounce on the dollar and then a redeployment into gold from a slightly lower level than it is right now, and to Bitcoin at a slightly lower level than it is now. So we're talking ever so slightly, really. That's my expectation. Like the Everything Bounce Part 1, but this is the Everything Bounce Part 4, I think, isn't it, really? Because we did an Everything Bounce Part 2, which is a Forex driven market. I think the Everything Bounce Part 3 didn't quite work out. So this is the Everything Bounce Part 4, so it's a rotation from stocks to commodities, mostly precious metals and Bitcoin, and then crypto should be lifted with that as well. So as nice as the rally looks right now, we are pushing the resistance still. There was a resistance last night of the Bollinger Band Center. We closed below that. This morning we retested the 10 exponential, rejected on the 50 exponential, all still very much within the descending channel that we're in, so should only expect really resistances and rejections while being within the channel. Closures outside of the channel, so we're talking on daily candle body closures roughly above 27,200 should have continuation, and so this rotation event, although it's my preference, will likely still kick in later on down the line, but Bitcoin has already broken out, gives it a head start above the rotation, so that would be really good for Bitcoin. But till then, I would expect rejections around these levels. If we take it to the 4-hourly, and we'll just leave it there, because again, I appreciate this video is probably hard to watch. The 200 simple and exponential on the daily here, basically the 26,650, that's a major area of intermediate resistance is being tagged again. We do have a pump signal on the 4-hourly though, so that is something to look at here. So that is true, we do have a pump signal. We're pushing the resistance, but the pump signal exists. So if we do consolidate or pull back in the middle of this channel, you might still be looking to reach the top of the channel before a rejection. So it does look good for a little higher as well. Whether we go down first to catch some support by the dips on these 4-hourly moving averages, preferably either the 10 or the 20, and then a move up to the top, that would be good. I could see that happening, recognizing that we're already at resistance at the moment. It's quite constructive in the way that it looks. We don't have any bearish divergence on the 4-hourly. It is looking quite good. So we either go straight up to the top of the range, or we consolidate and then go to the top of the range. I think the top of the range of this channel is written. I think it's written. It's pre-programmed. It's going to happen. But whether we break from it is a different story. Again, I do have a bias that I want a particular setup to fulfill more than anything else, but I'm open for Bitcoin to do what it wants. But my preference is that it comes up to the top of the channel, then back down to the bottom towards the end of this month, sees the rotation, and then catapults up and goes up into the 32 to then 38, maybe even 40,000 later on down the line this year. And just put it out there, like the halving for Bitcoin is less than a year away, so we should start to see some slow continuation of trend moving up into that halving, where we normally find a dump shortly after. But long story short, right, for those who want to buy into Bitcoin long term, I think for the most part, what we're going to be seeing is a range for Bitcoin between 20 and 40,000 for what's probably going to be another year to 18 months before we see anything much more than that. This is no different to the previous market cycle, where we've basically found a range roughly within 6,000 to 12,000. We spent the vast majority of the bull market within that range. Sideways, really, within 100% range. I think we're going to see the same sideways movement for Bitcoin now within our 100% range, roughly 20 to up to 40. over the next 18 months or so. And that's normal. That's perfectly normal. You can accumulate within that range, whether you do it at the lower areas or the higher areas. Think about it in the same sense as if you were to accumulate between 6,000 and 12,000. The end goal would have still been pretty fruitful, even if you just accumulated at the top of that range. So we're not close to the top of that range being 40 at the moment. We're closer to the bottom of the range. So it's still okay to think about piling in dollar cost average amounts into Bitcoin and maybe even altcoins, despite what the SEC are doing to them at the moment. The sentiment for altcoins is Wreck City. They're on a one-way ticket to Wreck City at the moment, and they're probably going to live in the center of Wreck City for a while. And that's still fine for a dollar cost average event. The accumulation ranges for altcoins are going to be even bigger than that of Bitcoin. Bitcoin, we've already established, is roughly going to be within a 100% range for accumulation. You could be looking at much more, double that for some of these altcoins. So thinking you're buying them low, they can always go lower, and they probably will. But the end goal is like 18 months, 2 years or more down the line, where all of this is all out the water. FOMC and CPI is a forgotten event. The SEC have done what they've done, and they can't do any more. That's all gone, done and dusted. And all of that is just basically just a new narrative, but adding to the same uncertainty and sentiment that surrounds the humble beginnings of a bull market in crypto. If you were around in 2019, 2020, you would have seen and felt the same sort of thing. Buying into things, you're waiting for them to move, they just don't move, but the hodlers win in the end for the most part, and you end up with 500, 1,000, 2,000, maybe even 10,000% gains in the end for those who persevered throughout the humble beginnings of a bull market, of a sideways accumulation range before a blow off top when everybody and their mother gets back into crypto. And that's how it's going to be again. But for the moment, it's a rough and bumpy ride. But in the short term, look, Bitcoin to the top of the range, I'm okay with that. Rejection most likely, down to the bottom side of the range, I'll be buying, and then back up and break out with the rotation event. Anyway, this video's gone on long enough. If you made it through, please let me know. If you haven't, obviously, I'll assume that you didn't. Right, thanks for watching. Have a nice day. Take it easy.